1031 exchange eligible investment opportunities. Planning to sell an investment property and defer the capital gains tax? Well, not all replacement properties qualify. In this video, I will share with you what properties are eligible for a 1031 exchange. Think you can roll your real estate profits into anything that you want? Well, think again. The IRS has some strict rules about what you can exchange and what you can't exchange into as a real estate investor. Check out this video and I'm going to walk you through what are the rules of a 1031 exchange investment. By the end of this video, you're going to understand all the nuances of a 1031 exchange and specifically what types of real estate properties qualify for the 1031 exchange investment. This way, you know how to use this strategy to continue to scale and grow and compound your real estate portfolio without paying tax. So what is the technical rule for a real estate investment that qualifies for a 1031 exchange? Well, it is like-kind property. So what does that mean? Well, it means that the property you're selling is a rental or investment property or used for business purposes, and you are reinvesting or exchanging into another property that is of rental purposes, investment purposes, or business purposes. So it's boiled down to rental property or business property for rental property or business property. Now remember, this is real estate for real estate. And what I mean that is that you cannot exchange into shares of a company, shares of a partnership, or shares in a public REIT. You're needing to buy like-kind property. So that is real estate assets, and that consists of commercial real estate, residential real estate. It can be single family, duplex, fourplex. It can be any type of commercial property, apartments, industrial, retail, office, mobile home parks, self-storage, car washes, data centers, even raw land. As long as it's used for rental purposes or business purposes, you can exchange one type of asset into another type of asset. You do not need to exchange from a single family home to another single family home or from apartment to apartment. You can use any type of real estate that's used for rental purposes into another rental asset. So what doesn't qualify? Well, any type of primary residence or second home that you personally use the majority of the time, that is not going to qualify for a 1031 exchange. What are some of my favorite asset classes that I have been using a 1031 exchange or my investors at Patriot Holdings have been using to 1031 exchange into? Well, we really like mobile home parks, and these are land lease communities, meaning that we don't own the mobile homes. We own the infrastructure, meaning the roads, the water, the sewer, the power lines, and the infrastructure within the community. Each person pays a lot rent, and we like 100-unit mobile home parks or more with at least 80% occupancy, and each of the residents own their own homes, and they pay a lot rent anywhere between $400 a month and $700 a month just to occupy that space. Mobile home parks have high profit margins, you can imagine, because you're not taking care of the toilets, the roofs, the carpeting. You just own the land. Also, we've been investing in self-storage facilities, a very high margin, profit margin business because it's metal buildings, it's asphalt, concrete, and metal roofs, metal buildings. Very low long-term capital expenditures or improvements needed on the asset as long as it's built the right way up front. And we have a lot of tenants, so you're not open to single tenant risk, meaning one tenant that leaves cannot turn your lights out like a large retail or industrial building. So these tenants pay anywhere between $100 and $400 a month. We typically can raise rents 3 to 6% a year so we can outpace inflation. And it's a very sticky type of asset, meaning if you have good population, good jobs, expensive housing in the area, people need places to store their goods. We are a consumer culture and people can't stop buying things and they have trouble throwing things away. So our goal is to find good self-storage properties that kick off cash flow. And then the last asset we really like is small bay warehouse. This is contractor bays, also known as, or flex space. It's anywhere between 1,000 square feet and 5,000 square foot units. And this targets any user that needs to store inventory, supplies, materials. We get HVAC contractors, roofers, handymen, classic car repair guys, or just retirees that want a place to go that they can work on all their toys and have their own garage space. So these units have a roll-up door, they have an office, they have a bathroom, they have a man door. It's very simple, easy, and they're sticky because there's not a lot of product out there. A lot of industrial developers built big Amazon warehouses. They did not build small bay industrial units. These are the three asset classes we like the most, and we've been finding that have been successful for our investors to 1031 exchange into with us at Patriot Holdings. If you operate your own portfolio of real estate, I want to highlight the assets that don't qualify for a 1031 exchange investment. Number one, primary residences. Number two, second homes or vacation properties used by your close family or personally. Number three, flips or spec builds held for resale. You cannot continue to flip a property and 1031 exchange it. Number four, partnership interests like an LLC interest, a limited partner interest, or five, stocks, REIT shares, crypto, or personal property. None of these assets qualify for 1031 exchange alternatives or opportunities to invest your funds into. What are a list of passive investment opportunities for 1031 exchange? Well, number one is a Delaware Statutory Trust. It's a DST. Delaware Statutory Trust is 100% passive. You own a fractional interest in high-quality commercial real estate. It keeps the tax deferral status and avoids you being a landlord, yet they are low-yielding assets, so be careful to do your due diligence with the sponsor or DST investment company. Next is triple net lease properties. I have a few myself. I have a Pizza Hut. I have a Dunkin' Donuts in New Hampshire. They pay me a triple net lease, meaning they pay taxes, insurance, management, maintenance, and all of the expenses, plus I get a base rent for their building and or the land that they lease from me. These are ideal investments because there's minimal management and predictable income. Ideally, you want long-term leases with national tenants, and you want turnkey. You do not want to be doing a lot of improvements to these properties, and they are income-producing properties. You're essentially buying a stream of income per the lease. And if it's a short-term lease, remember you're entering into a risky investment because if they do not renew the lease, these types of properties are very hard to release unless you're in a strategic location. So what are some pro tips to stay eligible for 1031 exchanges? Always use a qualified intermediary. You cannot touch the funds. If you sell a property, make sure your attorney or your escrow agent wires the funds directly to your QI. They need to hold their funds and they are going to execute on the purchase of your next exchange property you're buying into. You need to reinvest in a property of equal or greater value to the one that you sold. So if you sold a property for $1 million, the next property you buy has to be over that $1 million price. You must identify a new property within 45 days after you sell your property, and you must close on that property within 180 days of the time you sold your initial property. These two timelines run simultaneously. It's not 45 plus 180 days. You have a total of 180 days to close, and if you don't meet that timeline, you do not comply or qualify for a 1031 exchange. Keep detailed documentation of the 1031 exchange, meaning your QI or qualified intermediary has to fill out the proper paperwork and get them to your CPA. I highly recommend you use a CPA that focuses on real estate tax strategy. Be a lot better than a typical CPA who doesn't work within real estate. 1031 exchanges as a wealth building tool. Number one, using it to take a lot of small rental properties that are pretty hands-on with management, or they're capped out with their rental income and exchanging them all at once into a larger commercial asset that could generate easier income to collect and more income over time. Secondly, is selling properties that are heavy with maintenance, heavy with management, and looking for more passive opportunities where you 1031 exchange with a investment partner or you 1031 exchange into a triple net property, a tenant in common, or a DST. Another reason is you want to diversify across states and asset classes. So if you own all your properties in one particular city, you may want to sell that property and reinvest into other assets that are in other regions of the country to diversify your risk. And then ultimately, the real reason we're 1031 exchanging is tax-deferred wealth. Once you max the value out of the property that you have, in order to buy the next property and not pay tax, 1031 exchanges allow you to do that, to defer the money into this next asset that ultimately you're hoping will appreciate at a rapid rate and produce cash flow over time and reduce operating costs or expenses, giving you that compounded effect of buying a bigger asset that you leverage and it grows over time. And how do you make it truly tax-free? Well, unfortunately, you have to die. If you do die, then you get a step up in basis for your property value, meaning that the value of the properties at the time of your passing now is the new basis, wiping out any tax liability you have for capital gains or depreciation recapture. So now that you know the nuances of 1031 exchange, check out this video about how to 1031 exchange into real estate funds. This is a complex strategy, but one you can execute on, but you need to know the details in order to do that. This is a great way to take management-intensive assets that you would like to sell and find a easy passive investment opportunity to invest in a high-performing fund. Check out that video. Thanks.